it's Jen Suzuki, and I'm in the industry. I meet some of the greatest leaders out there, dealer execs, dealers, GMs, and I'm bringing them in the studio to talk to me about what's making their business pop, what's accelerating their growth. I'm sharing my own personal strategies for your sales teams, so I'm ready to get after it. Are you? Welcome back, listeners. So I was hearing some things about financial planning, and it really struck a chord with me because when I was growing up, I was never given the opportunity, or I was never taught really about finances, saving money, your credit score, what that means to your life, and what it means to when it's time to buy a car and a home and all of this stuff. And I can't tell you how much debt I incurred not understanding how to plan for my future. And I got a lot of student loans. It was a decade before I dug myself out of that. And on top of that, I was always told to get a credit card. And, you almost like it feels like free money when you're young and stupid. And anyways, I incurred a lot of credit card debt. And these are some of the biggest struggles for me to launch my career, being in debt. And of course, your sales BFF here would never want that to happen to you. We have a lot of young people in the dealerships right now. We have a lot of commission-based salespeople out there, and we've got a lot of people that have been doing really well in the last couple years, making big paychecks, and probably spend it. And of course, times are changing. And I felt it was such a great time to bring on a guest, an expert, a subject matter expert on financial planning. And I particularly like this guy, Rob Bacharach, who is going to share some time with us here today and share some of expertise and advice. And the reason why I really liked him is because he wasn't always in financial planning. This guy was a car guy. He was selling cars in a dealership. So he knows what it's like to be on a commission-based pay plan and the challenges that faces each and every one of you that are also in the same boat. And so because I also sold cars, I understand, and selling cars, and I was in debt on top of it, to dig out of that, or at least to avoid it moving forward. That's what today's show is all about. So welcome, Rob.
Hi, Jen. Thank you. I'm excited to be here.
Thank you. Well, he's a certified financial planner. He's a chartered retirement planning counselor, and he is really, really focused on helping everyone out there learn some tips and techniques today of the importance of financial education for dealers and salespeople and service advisors, everybody in the world that's feeling the impact of higher prices right now. And sometimes we feel like we can't save, or we can't save enough. I mean, some people save a lot. Some people don't save at all. And anyways, I want to ask Rob to hit up all these different angles. So whether you're already saving and you're trying to get to your next level, or you're just starting to think about it, or, you've been saving for years and it's time to figure out what's that next level. And so anyways, Rob, I'm curious, we've got like a ton of like margins getting tighter out there in the automotive space, and probably just in the world in general. And things are more expensive, and there's been peaks in our sales numbers, and people's commission checks have been really high, and we're starting to feel a little bit of the squeeze right now. And when you feel the squeeze, oftentimes it causes stress, and people are coming to work stressed out, trying to figure out what they're going to do. And I noticed that turnover is directly impacted by, I'm worried about my money, I'm not making enough money, and things like that. So in your experience, what are some of the common financial challenges that salespeople that are working on commission face?
Yeah. Well, first off, Jen, I just want to say thank you again for having me. I'm really excited to be here and to have this conversation here with you, and looking forward to sharing some insight with all of your listeners. I've been a
Sure.
follower of your podcast, and so I just want to say I'm happy to be here. So
Well, I'm thrilled.
um, I
This
think
is a topic that I've never spoke about, and I feel like I'm thinking about all my listeners right now and what we can bring to the table and really help them get this thing off the ground or next
yeah,
level.
and that's the goal here, right? And so I think there's two sides to the story as far as what people are encountering right now, right? You've got the dealer principal side of the story, and
Mhm.
the managers and GMs that are having to deal with compressed margins and adjusted pay plans, and then that trickles down to people thinking about whether they are changing dealerships or staying at the same dealership. And
Mhm.
obviously, a lot of places have really built these strong teams over the years, and they want to retain those people.
Yes.
And to do that, we have to help people out with the stress that they're feeling on the financial side of life, right? And so I think that's one side of what we can help out with here today. And then the other side is just for the personal, for the individuals. A lot of the conversations that we're having with our clients here today are all about how we can capitalize on the good times that we've been having to make sure that we are set up to capitalize during potentially some tougher times that we might come across. And I think that's to say, it doesn't mean that, we're just going to crash and burn off of the highs that we've been at in the automotive industry for the last 4 years, but, to expect a little bit of regression or some compression of margins or changing of comp plans and things like that, I think is pretty reasonable. And so that's what we've been helping everybody out with on both the employer side and the personal planning side, is to help make sure that you're in the right place to capitalize during the tougher times. So what that means from my perspective on the employer side is making sure that you're doing things to retain your best people, right? And a lot of that is starting to go above and beyond what has become the norm of just offering a 401k plan or having health insurance for people, right? These have kind of become table stakes of what your top performing individuals are expecting. And we're starting to see a progression towards other benefits being implemented for employees, especially folks in the automotive industry, because we spend so much time at the dealership. A lot of your employees, they don't even have time to go get the advice that they need. So offering things like financial education in-house that coming in to be able to help people calm their fears, give them answers to their question, allow them to get answers without having to spend the time on their day off to do it, has been something that we've seen a big progression on recently. And has turned into things that can help with keeping your best people, reducing turnover, and attracting new talent. So,
okay, so you go into dealerships and you're hired by dealers to come in and work with their entire organization on financial planning.
yeah,
This is
exactly.
a perk. This is an employee perk.
Exactly. And what folks
Gotcha.
have liked about what we offer is that we're not coming in to try and sell you employees an insurance policy or sell them there's no product sale here. We're being brought in to give financial education of real world advice about what your people are encountering, right? And we're able to do that because we've been there. I've been there. I spent time selling cars, working in the F&I department, doing those things. And then since I left, a lot of those people are my clients, and I still love spending time at the dealerships and seeing those folks. So, we're just coming in to give education to help people get the answers and the advice that they need. It's tough to get today. I mean, there's news and there's Twitter and there's your aunt and your uncle and your brothers and your friend. I mean, it's tough to decide really where to get good advice from. That I think is in itself one of the biggest challenges a lot of our clients face today, is just
Not getting
figuring out
advice.
where to actually get the advice from. Yeah.
Yeah. I think, as I mentioned, earlier, it's like I never had, they just don't teach it in school. I don't know if they do anymore, but they certainly did when I was growing up. So that's
Yeah.
one of the common challenges, not knowing where to get the advice from.
Yeah, absolutely. And transitioning to what the individuals are facing these days, and this, some folks might think this sounds odd, but whether you're a GM and you're making over $1 million a year, or you're a new salesperson and you're maybe just starting to make your first six figures ever, and you're 24 years old and you're like, oh my God, I'm drinking from a fire hose. I don't even know
Yes.
what to do with this money. I'm spending it on watches and TVs and whatever it is.
Sneakers.
Sneakers, yeah, there you go. Absolutely, you're getting the Nike collection built up. Look, Rolexes is a huge thing. A lot of
Facts.
you gotta get the Rolexes. So,
Mhm.
look,
Mhm.
I get it. I think there's a stage of life for that, right? But I do think it's important to understand it. It really, I found it doesn't matter as much the income level. The issues are the same. It's just
Okay.
then the complexity built into those that tends to be different from one income bracket to another. But stuff that we're facing right now with challenges is, hey, my comp plan is changing, right? So do I need
Yes.
to go in and do I need to drastically change how I'm doing my savings? Am I going to still be able to afford the rental property that I had just bought last year when my income was way up? And how do I deal with things like that? Or can I afford the new car that I decided to lease from the BMW dealership next door, or whatever it might be? these are the real challenges that our clients are facing,
Mm-hmm.
and helping them come up with solutions to those things is what we do, and helping them get the advice that they need quickly,
Mm-hmm.
right? Because they only have a little bit of time to get the advice that they need. They don't want to spend their whole day off at a doctor's appointment, an accountant's appointment, a financial advisor's appointment, right? So, we want to help give some of that time back to folks. So some of the biggest challenges that we see with folks is figuring out how to do that consistent saving and investment outside
Mm-hmm.
the company's 401k plan when your income can and will fluctuate as much as it
Fluctuate.
does in the automotive industry. That's one of the
Mm-hmm.
biggest ones. And then number two, and this is aside from just where to get the advice in the first place, but number two is, how do I reduce my tax bill?
Yeah.
How do I reduce my tax bill today?
Mm-hmm.
But not only that, how do I also reduce my tax bill when I actually go to use this money that I've spent a lifetime investing? So I think those are the two biggest challenges that we run into for our clients, or three, I guess you could say, is the where do I get the advice in the first place, right? And it doesn't matter whether you're looking for that first piece of advice,
Mm-hmm.
or if you're looking for that advice because you've really leveled up your investments and you're trying to figure out what's the next person that can really advise me on. Well, I already have investment properties. I already have stock accounts and things like that. I need somebody to give me advice at the next level, right? Do I need trust accounts? Do I need private equity investments, right? What's the next level investing, and who do I get that advice from? And then it's the tax planning is huge for folks right now, right? Because I mean, people are making tons of money. You've got even if you're getting to file at a married tax bracket, you're still getting beat up pretty badly, and you're limited with your deduction opportunities. So I
Mm-hmm.
think those are the biggest challenges that we're seeing today for our folks.
Okay, so hit us with it. If we need some strategies right now on managing that cash flow, especially when our commissions are fluctuating high and low. What
Yeah.
kind of non-retirement investments should we be putting our money in? Are there we thinking about our family right now. I'm like doing the college fund for my kids, and that's a
Yep.
savings plan. But that's important because those are things that are going to come down the road. The other things that I have to think about is my properties went up in value, in the last couple years, and we've had some big fires where I live, so I got extra scared and called my insurance companies and
Yeah.
really started to evaluate making sure that I'm protected because, gosh, I mean, saving money, I don't want to spend it on things that I am planned for. So I'm sure there's a lot of things that are factored in here when you're thinking about the future and you're thinking about securing your family's future.
Yep, absolutely. And so
Hit
the
us with
the
the
number,
strategies.
yeah, absolutely. So the number one thing that we recommend to everyone in the process that we take everybody through, regardless of the level that you're at right now, is
Hmm.
we want to start with the basics. We want to
Okay.
build you a really, really strong foundation so that when, not if, but when life happens, we don't know
Hmm.
when it's going to happen, but it's going to happen. And that could be, well, the economy slows down and I'm selling less cars, or it could be you have a medical emergency, right? Or it could
Yes.
be you live in California
Unexpected
and there's a
things.
natural disaster that
That's
comes
right.
and, sweeps your house away, right? So we want to help make sure that everyone has every teeny little thing that you can think of your foundation built out. So everything from making sure that your emergency cash is appropriate
Hmm.
for wherever your level of income and wealth is, making sure that you have things. I mean, Jen, you hit the nail on the head. One of the biggest things that I recommend to everybody right now
Hmm.
is go and check where your homeowner's insurance is at relative to where your property values are at.
Hmm.
Because almost every single client that we speak to, there's a big difference between those two things. And
Hmm.
especially if you're in a Florida or a hurricane area or California or
Hmm.
Hawaii, I mean, this is real life, right? I mean,
Yeah,
something like this happens to your home, you might have the appropriate insurance coverage, but if it's covered for only two-thirds of what you really need it to be
that's
covered
the
for,
issue.
because home values have spiked, I mean, that's a huge out
You
of
won't have enough money
pocket.
to rebuild.
Exactly. So,
Mhm.
people sometimes undermine the value of just making sure that you've got proper funding in place for when life happens. I think that that's huge, right?
Mhm.
And on the other side of that, the insurance, I think, is an estate planning side of things. Most people, they don't have the proper documents in place that that they
Mm.
need. And the
Mhm.
folks listening on this podcast, you're probably leaders, you're probably in positions of power, you're doing very well. You may even be the sole, breadwinner for your family. Well, if you don't have just basic power of attorneys, healthcare directives, trust,
Mhm.
wills, those basic documents set up
Mhm.
that nobody's thinking about before they're coming to ask us about private equity and crypto investments and things like that. It's like, hey, if that's, what are you doing all this investing for, right? You're doing it to be able to
Yeah, if you're
take
not
care of your
protected. Yeah.
family
Mhm.
and enjoy time with your family. So getting these basic things set up is crucial. And we heavily encourage everyone, take this extra cash you got right now. You're trying to figure out what to do with. Go check all these boxes first, right?
Okay.
Beef up your emergency fund, beef up your insurances, take care of your estate planning docs, things like that. I think is really crucial.
And and
Um,
and if I could just, put this in here because I faced this. This is last year. I was thinking about these things, and the last time that I did my power of attorney trust will was over 10 years ago, and my assets have changed, and
yeah,
I've had kids since I did this.
yeah,
So for me, I needed to renew that probably like 5 years ago.
yeah.
How often do you renew these things or reevaluate your trust or
Yeah,
will?
so the great thing now is with technology, right? This can get a lot easier than what it used to be. And
Mhm.
so, you have a major life event, you should go and update those things,
Mhm.
right? I mean, that's the bottom line. There's no set timeline or number of years.
Mhm.
If you're working with good advisors, they should help remind you of those things. But if you have kids, you get married, you get divorced,
Mhm.
or your kids get to a point where maybe you set it up, kids were minors and now they're 30 years old and they're doing great. They
Mm.
don't need to have guardians written into their wills anymore, right?
Mm.
um for those of you out there that are listening, they're saying, geez, I don't even have any of this stuff set up, or it's 25 years old and it's probably irrelevant anyways. There's an incredible website that I really recommend to folks. If you
Okay.
don't have a heavily complex situation, you don't own a whole ton of real estate or a ton of side businesses and things like that, go to trustandwills.com. All right. This is a legitimate website that you can go in and an afternoon watching football on the couch with your iPad in your lap with you and your spouse or whomever, you can click through and get the basic estate planning docs that you need set up in a matter of 30, 40 minutes, just clicking through, sitting right on the couch. So that's a great resources that we recommend to a lot of clients for just get that stuff in place. Check the box before you're starting to think about where you're spending your next dollar investing.
Okay. Okay, and
Um,
then what happens?
yeah, and so okay, so this is where we go, right? And some folks have this stuff set up, but a lot don't. So we go through, we make sure we get these boxes checked because I'm a believer that we can't start talking about the next level of investing until we get this stuff set up. All right. So we go through, we make sure you get all this stuff set up, all the basic little stuff that you need. Now it's time to talk about where are you at in the investment hierarchy, right?
Okay.
Are you already maxing out your 401k? Do you have stocks that are starting to be saved outside of your investment accounts? Things like that, right? Assess where you're at. What do you have going on and what do you not have going on? And the biggest thing that we're finding with folks, especially in the automotive industry today, is that folks have a lot of cash that has just stacked up on the sidelines,
Mm.
right? I mean, I know a lot of folks that we work, they've out earned even what they're just spending on stuff, right? They've bought the TVs and the watches, and it's still accumulating in cash in the bank. And there's a unique thing going on in the world right now that we haven't had in a long time where it's like, oh, wow, I can get 4% on my cash in the bank or 5%, maybe even depending where you're at. That can sound really attractive, but as much as it's important to have an emergency fund, I'm a firm believer that there is a such thing as having too much cash,
Mm.
especially just sitting in money market funds.
Yeah, not making money
So,
for you.
yeah, I mean, it's making money for you right now. But I think what a lot of folks don't realize is that the banks can only afford to pay us that sort of interest rates on money that you can take in and out of the bank anytime. They can only afford to do that for so long. So there's a reason that the long-term averages of interest on your cash is a lot lower than where it is today because it's really expensive. Banks need you to say, hey, I'm tying this money up for 5 years at least so they can go make money with it to be able to pay you those. Money market accounts, we just take our money in and out of the bank whenever we want. And so right now, there's an interesting thing going on where there is just shy of $6 trillion sitting in money market accounts today. And that makes me kind of stop and think like, wow, that's a lot of money sitting in money market accounts. And that's happening because people are scared about what's going on in the stock market and the economy and inflation and interest rates and the housing market. And are we going to collapse? Or are we going to have another 2009? People are really nervous about what's going on in the economy right now today. And that number that we just have sitting in cash is a good indication of that. And so what I tell a lot of our clients is that Warren Buffett has a really famous quote. It says, be fearful when others are greedy, and be greedy when others are fearful. And if we look back at times where most, the general population is being fearful, that tends to have been some of the best times in history to do your investing. So if you're sitting on the sideline right now with a significant amount of cash that is just there and you're like, gosh, I don't know what to do with it.
Well, you saved it for a reason. You were saving it for these downward turn times, right?
Yeah, exactly. And it might not feel like we're in these downtrends right now, but there's a ton of money in cash, which means it's not in the stock market.
Yeah.
Home sales just hit, the October numbers came out. They hit the 20-year low for home sales last month, right? The lowest number of home purchases or mortgages issued last month that we've had in 20 years. So while prices in your area might be down drastically, there's a lot less people buying houses than what there were previously. So I think just take some of these things with a grain of salt to say, hey, if you've got the money you need set aside for an emergency or a medical expense or something like that, it's probably time to take that cash that, even though it feels good right now, you're getting 4% on it. If I show you a chart of what that 4% is going to do over the next 5 to 10 years versus what you're investing in small business or stocks or real estate is going to do over the next 5 years, it's not even close. And so we really encourage folks that there is a such thing as too much cash. And don't get caught in that money market trap just because it feels good today.
Okay. Well, there was probably going to be some other things that you would add to this checklist that would really help our listeners today step back and say, okay, I'm here. I'm going to start be more mindful of these areas. And I'm wondering if there's some strategies that they can do right now to start saving, or even thinking about how that, because some people will say to me, they're like, look, I don't save a lot because I don't know how much I'm going to make. And I say, one of the easiest things for me is to split up my account. So when I get a paycheck, X percentage is going to a different account. And then it's helping me actually put money aside. But sometimes people think like they're scared to do that because, they did have all this money 2 years ago. And some people are starting to feel, the squeeze. And so now they say, oh, well, maybe I shouldn't be saving as much, I'm not making as much. And so, so on the other side of the coin, what's your strategy?
Yeah. So I think I try and guide folks in one of two directions, because most folks are either one or the other. You're either pretty good at budgeting your money, you just don't know where to invest it. And so you have a bunch of cash that's accumulated and you're relatively frugal and you don't have a problem with if there's cash in the bank, you just spend it. Right. And so if you're in that camp, what we do for a lot of folks is that we set up a de minimis automatic savings plan. Let's go in and let's pick a number that look, we know your income fluctuates up and down, but we also know that if you're making below X dollars, we got a much bigger problems on our hands than just how much we're saving each month into some account. Something's seriously wrong. And so we pick a de minimis number at what we're really confident we're not, going to make less than this number. And we know we can save this amount. And then what we go in once a quarter and we say, hey, how much have we accumulated? Great. This quarter, it's 5,000. This quarter, it's 20,000, whatever it is, because you're good with not having too much money in the account that you're just going to end up just spending out the window. That's a good way to do that for those folks, is that you can do what I call chunk savings. Set a day minimum amount so you know you're getting at least a certain that's getting put away into savings. And then as you get chunks, put that money away. All right.
Like your
If you're in the other
bonuses.
camp where you're like, I don't do well with money in the account. If it's in the account, it's getting spent.
Spent.
Somebody's going to spend it. My kids are going to spend it. I'm going to spend it. My spouse is going to spend it. Whatever it is, it's getting spent. You can do what I call not quite automatic savings plans. I like to call them forced savings plans. So they're savings plans that are, once you set them up, you got to make those payments, right? You got to put the money in there and find a way to make sure that it's going to happen every single month. Otherwise, the investment is going to cause you troubles, right? So two great strategies, if you're in that camp, is what's called a cash value life insurance. Can be a great option for that, right? I know people have a lot of different opinions about life insurance. Look, you're not doing it for the life insurance. It's a great tax advantaged investment savings vehicle when they're set up the right way. It's a great tool for certain people at certain times of life. And once you say, hey, I got to save $1,000 a month, you got to save $1,000 a month into that. Otherwise, it can cause issues with the investment. Another great forced savings plan that folks don't think about this way necessarily is rental real estate, right? Once you sign up and you buy that piece of rental real estate, and this is all under the assumption that the payments into the policy or the mortgage payment is within our means of what we know we're going to be making, and that we know we can afford, right? And we're just looking for somewhere to make sure the money is going, right? So that's kind of the level one. But once we've decided that, you go buy that rental property, you got to make that mortgage payment. That money's got to get put away. And, I'm a believer that we don't have to reinvent the wheel to be really, really wealthy at an older age. I mean, stocks and real estate can get you there. Combination of those two things, they can really get the job done. So, over here, you can do chunk savings if you're better at managing your money. If you're thinking, hey, if it's in the bank, it's going to get spent. Life insurance or investment real estate are great examples of what I call forced automatic savings, because once you sign up, you got to make it happen.
Yes. Yeah. No, these are really good strategies and all good things to think about, especially as the times continue to change and income levels change. Then and whether you're high or low, you still got to think about all these things. And you start to have a baby and you get married and all these great things that happen in your life. You can't be forgetting about all this stuff
Right.
that secures your future. Yeah, and everyone is always looking for a next level in their careers. And when you hit those next levels and you are making more money, it's time to step back and look at this and say, all right, what do I need to take care of, next?
Yeah. Yeah. So look, overarchingly, what I really try and encourage, because we're getting to the point now where we're really starting to see the progression of individuals, right? Guys I've worked with that when we started working together, they were a finance manager and now they're a GM, or they were in sales and now they're on the sales desk, right? I mean, so we're really going through this, and we try and encourage folks, look, part of life is enjoying the money that we spend, go on some trips, go on some vacations, upgrade your TV, whatever you got to do, right? But do it within reason of trying not to advance your lifestyle spending too much as your income goes up, especially in the automotive industry. Because if anyone's listening that's been in the automotive industry for, let's say, 20 years or so, you've seen times where your income went from all-time highs to all-time lows. It can happen. I mean, the automotive industry is a very cyclical industry. It has ups and downs to it. And so I think part of being a successful investor and making a living in the automotive industry is trying not to level up your lifestyle too much.
Great
as
advice.
your income increases. It's like,
don't live beyond your means.
Lifestyle once for every 2 levels that you make more money.
Excellent. That is sound advice. Well, I want to thank you for sharing your time and your expertise with us today, especially coming from, a car guy perspective, knowing the challenges commission-based salespeople and service advisors are on, it can certainly pose a lot of challenges and threats. And all of this is great, especially for dealers that are listening. This is a really great value add to employee retention and being able to support people and their careers and helping people be comfortable in their day-to-day. So when they come to work, they're not stressed thinking about the money, which is one of the biggest causes of relationship troubles, no matter what relationship you're in. And
Yeah,
anyways,
absolutely. And, look, I think this is the last thing I'll mention, Jen, is that I
sure.
think sometimes as we climb the ladder in life in our jobs, careers, we forget that not everybody below us has access to the same advice and resources and things that we might have access to once we've really leveled up. And
Mhm.
so, your folks and the people around you sometimes have this stress and these fears because they just don't know or they don't understand. And if you can
Mhm.
help them get that information so they do know and understand that, you can help them relieve some stress. You can help them be able to take action. You help them be happier when they walk in the
Mhm.
door in the mornings,
That's what
right?
I'm
Because they
saying.
know what they need to do and all
That's
that
right.
good stuff. So,
Yeah, it keeps people centered and focused on next level growth. That's what we all
yes,
want.
absolutely.
Okay. Well, I'm going to put some of your contact info in the show notes and also that link to the site that you suggested. People could
Yeah.
get their trusts and wills from. And yes, again, thank you so much for the expertise today.
Yep. Thank you very much, Jen. It's been an absolute pleasure. I appreciate it, and I'll look forward to staying in touch.
Okay.
If you like these episodes and my sales game techniques, you should snatch up our latest dealer education program I'm hosting. It's called Jen's Remote Classes, and it's a 1-hour, once-a-week class with me alongside other dealerships all pursuing the same end game to achieve top 10% status in your dealership. For more info, hit me up. All my contact info's in the show notes. I want to hear from you. And follow Dealer Talk with Jen Suzuki right now to get notified when episodes like this one drop. This is Jen on the podcast Dealer Talk with Jen Suzuki. See ya!